Welcome back to Alpha Recap. Today we're unpacking a risk-off market tape that followed an oil spike and some big sector divergences. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. There was a lot to get through from the close. Geopolitics, levered tech pain, and a handful of interesting funding stories.
So let's start with the macro headline. Markets closed lower after crude surged above $100 a barrel amid tensions around Iran. That pushed airlines into the red and really set the tone for a risk-off day.
Yeah, that tracks. When oil jumps like that, it's an immediate profit squeeze for carriers. They pay for fuel in dollars, not in good intentions.
Right, and we saw ticket prices move up too. On the one hand, you get higher revenue per ticket. On the other, higher fares tend to blunt demand and, if fuel hedges lag, margins get hurt.
Exactly. So, what really stands out here is the timing. If carriers had effective hedges in place, they were protected for a while. But sustained oil north of $100 creates a longer-term problem. Fewer price-sensitive travelers and margin pressure.
One of the market signals of that risk-off was the big sell-off in the triple-levered Nasdaq ETF. It plunged, down about 4.5% to about $47.54, on roughly 139 million shares traded.
That was telling. Levered funds amplify every move, so when large holders de-risk, the selling becomes outsized and can force others to liquidate. We saw that domino effect today.
Mhm.
And to add to that, the fallout isn't just about growth stocks. Forced selling in levered products can widen volatility and push flows into energy, staples, or cash, which feeds into the narrative we saw today.
Airlines were especially hammered. So how should investors think about near-term earnings and guidance risk here?
Short answer, watch hedging disclosures and guidance updates. If carriers update expectations or flag rising fuel costs, that'll matter to margins and, by extension, to equity performance.
Okay, big picture macro covered. Let's pivot to tech and fintech. Bloomberg Tax confirmed it would spotlight AI tools at the Tax Executives Institute conference March 15th through 18th, and Thomson Reuters is presenting at an investor conference on March 12th. That felt like enterprise AI continuing to move from lab to sales.
Yeah, and honestly, I was a bit surprised by how visible the push was. Enterprise incumbents are trying to show real product demos and monetization paths. That's a shift from research headlines to contract wins.
Which names are likely to get pulled into that story?
Tax and payroll names for sure. If Bloomberg Tax and Thomson Reuters are highlighting AI solutions, companies with exposure to tax processing or payroll workflows could feel competitive pressure or benefit from partnerships.
Now on fintech infrastructure. Cast raised $80 million in a Series A led by established investors. The company is building on stablecoin rails and was founded by a former executive from Circle. That seemed like a big vote of confidence for tokenized payments infrastructure.
Right, right. And the other thing is that funding round says institutional capital is treating stablecoin rails more like plumbing than speculative crypto. This is about treasury services and B2B payments, not retail rallies.
So for listeners who don't live in crypto land, explain why stablecoin rails matter in simple terms.
Think of stablecoin rails like a faster, programmable ACH. Corporates could use them to move money quickly across borders with less friction. If CAST can get institutional adoption, banks and payments vendors will take notice because it's recurring, platform revenue rather than one-off integrations.
Got it. Moving on to healthcare, Stryker launched a smart hospital platform to connect devices, data, and care teams, and Marpai secured a marketing deal that gives its pharmacy arm access to up to 1.5 million covered lives.
That Stryker move is classic medtech strategy. Push into software and services to make revenue more recurring. If hospitals sign up, that could improve margins over time. For Marpai, distribution access is meaningful only if they can convert those covered lives into actual revenue.
Conversion is the watchword then. For small caps, these wins can be headline-worthy, but not necessarily the same as revenue growth until enrollments show up.
Exactly. Keep expectations tempered until we see enrollment and monetization metrics.
A few governance and legal headlines to flag. Vicor's chairman and CEO reportedly sold about $9.3 million of stock. Formal Form 4 filings were expected to give clarity on the number of shares and pricing. And there was a securities fraud class action solicitation involving Tech Robotics, which typically means elevated near-term volatility.
Large insider sales create noise. They're not necessarily a red flag. Sometimes executives diversify or meet personal obligations. But until the Form 4 details appear, investors should be cautious. And with litigation notices, small caps can get whipsawed.
Right, short reactions here, quick takes. Right.
Yeah, absolutely.
Let's run a rapid-fire checklist of what to watch next.
Go for it.
First, oil trajectory and Iran headlines. Continued escalation or signs of de-escalation were going to be the single biggest market mover into tomorrow.
Second, airline statements about fares, hedging, or guidance. Those comments could change sentiment quickly.
Third, the price and volume action of the Nasdaq 100 ETF and the triple-levered Nasdaq ETF for stabilization or further forced liquidations.
Fourth, the Form 4 filing details for that reported Vicor insider sale. They'll clarify timing and intent.
Fifth, any court filings tied to the Tech Robotics solicitation. Early legal filings can cause rapid headline risk.
Sixth, previews or slides from the Thomson Reuters Investor Day on March 12th. Management color often signals strategy tweaks.
And seventh, any partnership or regulatory updates from CAST. Those will be the first signs of commercial traction for stablecoin rails.
All good watching points. I'd also add paying attention to commentary from carriers in their next earnings calls. Fuel and fare language will be scrutinized.
Let's step back and summarize the emerging patterns we saw today.
Geopolitical risk was front and center. Commodity price shocks, oil above $100, produced reflexive risk-off selling. At the same time, targeted growth narratives stayed intact. Enterprise AI, stablecoin infrastructure, and healthcare software still attracted capital.
So for traders, the message was manage volatility and margin risk. For longer-term investors, it was separate transient macro noise from structural moves in AI, fintech infrastructure, and healthcare services.
Exactly. I mean, when you step back and look at this, short-term headline risk is noisy, but it doesn't erase multi-year trends. The key is to not let leveraged products dictate your long horizon unless you're actually using them as that exposure.
Before we wrap, a few quick practical tips for listeners who trade or invest around these themes.
Keep leverage in check. Monitor margin requirements, especially around volatile macro events. And separate tactical trading decisions from strategic portfolio bets. The catalysts that matter for enterprise AI or fintech infrastructure are adoption metrics and partnerships, not daily headline noise.
Final takeaways then.
1. The crude spike to over $100 triggered a clear risk-off, and airlines were the obvious first casualty. 2. Levered growth products amplified the sell-off, creating potential contagion into broader risk assets. 3. Despite the noise, targeted investments continued. Think enterprise AI demos, the $80 million fundraise for stablecoin rails, and healthcare software pushes. And those are longer-term themes to watch.
Solid. If you remember one thing from today, short-term macro swings can create buying or selling opportunities, but keep your time horizon in mind.
Totally. And if you're managing positions, pay attention to hedges and liquidity around earnings and conference events coming up.
That's our show for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.